Dear therapist, as a therapist, you know that it's really important for you to understand the tax deductions that apply to you. That way you can minimize your tax bill. So in this video, I'm going to go over 6 tax deductions that you should know about and that you should be taking advantage of if it applies to you. Before I get started, I wanted to introduce myself. My name is Janet Andrada. I help therapists worry less about taxes and spend more time with their clients. Because of COVID, we shifted into this telehealth space, right? So you no longer need to work at a physical brick and mortar location. You could work from home and do your sessions at home. So because of this, it's important to know about the home office deduction because you more than likely qualify for it. So your home office deduction is applicable if you use your space exclusively for business purposes. So for example, you cannot use a guest bedroom and just go in there and use your laptop, but it's going to be used for personal purposes. Or it can't be your bedroom where you're using it and you set up in your bedroom, but you use it for personal purposes. So if you use it at all for personal purposes, you won't be eligible to take this deduction. Examples of what you could write off are electricity, heat, water, any repairs or maintenance. So don't forget about those, especially bigger ones like your like replacing your HVAC or something that applies, to your entire home. You could also write off a portion of your rent, mortgage interest, any internet that you pay for, your computers or printers that you purchase for your home office, and of course furniture if you're purchasing furniture for your home office. Now the home office, it works in different ways. You want to know the percentage that your office is taking from your entire home. So when you do your taxes, make sure that you're aware of the square footage of your home office and the square footage of the entire home. That's what's going to decide how much you could write off. You could do a simplified method, which is a certain amount per square foot. And then you could do your actual expenses where you're taking everything that truly happened and you are multiplying by the percentage of your home office. Another thing that I see commonly missed are travel expenses. So the travel expenses, we might not realize that we could take a portion of our travel off because we don't really know what constitutes as travel and what is not travel. So if you're doing any movement that is for business outside of your home office or outside of your normal office, then that's going to be a travel expense. Examples could be if you go to a conference or you go into like continuing education class, even if you go to the post office to drop off things, or if you go to the store because you need you can't wait to buy a printer online, right? So you have to buy it like right now. That happened to me. So you could write that travel off, and any mile counts. So if you're going to be doing any traveling, make sure that you keep the mileage. And then of course, if you go somewhere like a conference in a different state, or you go and take like a business, courses or anything like that that requires you to leave, your lodging, your airfare is all a write-off, and your business meals are a write-off as well. So just make sure that you're taking advantage of that. Another big one that I see, especially for new therapists, is not writing off professional development costs. So that's absolutely something that you could write off. Any continuing education, seminars, conferences, and this could be anything. It doesn't have to be related to your field. So like, let's say you want to go to a conference to learn more about marketing for therapists, then you could absolutely write that off. Let's say you don't even go to a conference, you just purchase a course online, then that is a business write-off. For your field of work, you are going to want to purchase any books that are, again, business related. You're running a business now, so you might get a book on how to be a leader. You might get a book on like how to do your marketing or how to do your accounting, things like that. So you could write those off. Any journals that you purchase or materials that relate to your field of study, absolutely you want to take that off. Now, don't forget also about your memberships. If you're part of like the American Psychological Association or National Association of Social Workers, then make sure you are taking those membership fees as a business expense. Next, we have charitable contributions. So this is a tax deduction. It allows individuals to reduce their taxable income whenever they donate to a qualified charitable contribution. That is key. It has to be a qualified charitable contribution. If we go to the IRS website, we'll be able to find a list of all the organizations. So you could go in there, search a business name, and if they're on that list, then the IRS recognizes it and they will let you write that off. Something to know though, this is going to be more beneficial to somebody that itemizes on their tax return versus taking the standard deduction. So just keep that in mind. However, it's always great to donate. And don't forget also about any, not just monetary donations, but if you go to the Goodwill and you're like, I have this old furniture, or I want to donate this desk, or even, any clothes that you donate, any shoes, purses, things like that, you could absolutely write that off. What I would do is when you go and drop off all these items that you're going to donate, ask somebody there at Goodwill or wherever you go and to give you a receipt with estimated values of the items that you donated, because that's how you're going to justify how much you wrote off on your tax returns. Oh, health insurance premiums. This one I always see missed. So health insurance premiums are a little bit tricky. They're a little bit different depending on if you are a sole proprietor or your business is an S corporation or even a C corporation. They're all different, right? So let's talk about just general health insurance requirements. The way that you can write off health insurance premiums is if you aren't covered everywhere or have the opportunity of being covered somewhere else. For example, let's say that your spouse has a full-time W-2 job, the employer pays for the health insurance, you're eligible to be on their health insurance, then you're not going to be able to take the health insurance premium deduction because you have the opportunity to get it somewhere else and you chose not to. However, if you are self-employed and you're the only person making the money, or there's no other way that you could be covered with health insurance, then you could write that off on your tax return as well. Finally, I always, this is an easy one, guys. If you're not doing this, like, you need to start doing this. So retirement contributions, if you want to contribute to your retirement anyway, right? You want that money to start working for you now. By the time you retire, you're going to double, triple your income. I mean, I'm just throwing that number out there, but for sure, you're going to get a return on your investment. And in order to do that, you need to set up a certain retirement account. You could start off with an IRA, a traditional IRA, or you could also do for your business a SEP IRA or a simple IRA, or there's even 401k plans. They all have different requirements, and there's different rules for every retirement plan to be able to write off, a certain amount. But let's stick to the traditional IRA, which is not done through your business. As an example, you could deduct up to $6,500 for 2023. They always adjust it. If you're over 50, then you could deduct $7,500. Now that comes off completely on your income. So it essentially reduces your taxable income, what you're being taxed on, by $6,500 or $7,500. So one of the things also to keep in mind is a Roth IRA account. Those do not have the tax benefits now. So it's kind of like you are paying the taxes now, and then later it's tax free. So that's a Roth IRA. When it comes to traditional IRAs, you are not paying, right? Because we deducted the $6,500. So you are not paying taxes on it right now. When you retire, then you will pay taxes on it. So those are the things that you need to know. And making sure that you before making a decision, that you talk to a tax advisor and to a financial planner to make sure that all, everything's aligned with your personal goals and where you want to be when you retire. Another cool thing about the retirement contributions is that you have until April 15th of the following year. So for example, we had until the tax deadline, which this year landed on the 18th, April 18th. So all individuals are able to start up a retirement account, let's say in March. I wouldn't recommend waiting that long, but let's say in March, and as long as everything's set up, you could contribute and ask your financial planner to assign that to your 2022, or like, the previous year taxes. And that way you could write it off, even though you didn't technically pay for it last year, you could pay for it this year. The key here is to keep good records, right? If you're taking a home office deduction, keep your electricity bills handy. If you are doing your retirement contributions, make sure that you are documenting like how much you're contributing. That way you make sure you're taking off not the full 6,500 if you only contributed 5,000, for example. Health insurance premiums, again, just make sure that there is documentation that you did not qualify for it. There's, and you will know because a lot of this is reported on a tax return. Charitable contributions, these are the ones that we have to be very careful with when you donate non-cash items, right? Make sure that one, you're documenting it. So again, go to Goodwill, get a receipt, get estimates on everything. They might not know, so you might have to fill that out. So do your due diligence to make sure that you're writing off the correct amount. I'm actually going to post two things, or to send you two links in the description. I'm going to put the IRS tool that lets you find qualified charitable organizations. And I'm also going to give you a list of market value for certain items. That way it'll help you have a rhyme or a reason of why you selected a certain amount, and you know that it's not being overstated. So that's going to change every year. So depending on when you see this, might be different, but just make sure that you are aware of that, and you want to have some type of justification for all of that. If you're doing travel mileage, right, make sure to have good records of your mileage, and you want to document where you went from point A to point B and what was the purpose. It has to have a business purpose. These are the 6 tax deductions you should be taking right now if you're a therapist. Don't miss out on these. These are easy tax deductions. Don't miss out on these, because you are essentially paying a lot more money than you should to the IRS. And of course, the goal is for you to keep some of that in your pocket to reinvest in your business, or to have a better quality of life. So that's going to be it for me today. Make sure that you're liking and commenting on my content, that you're subscribing to my videos. It really helps me get my content out to other therapists that are feeling overwhelmed, or just are very worried about their taxes. All right, I'll see you next time.